Hello guys, I hope my screen is visible, right? Okay, so we'll start this session. So I hope the screen is visible to everybody, right? So first we discuss the agenda for today's briefing. So I'll give you the structure that how we gonna conduct this whole webinar, right? And when we'll open this webinar for taking the Q&A, and I try to make it more practical so you guys have an idea that how to apply all those things which we are discussing in this webinar practically into trading. Okay. Okay. So, myself, Anurag. So, I give you the brief about my experience and so first of all, I really
Screen is not
apologize.
clear, Mr. Anurag. Good afternoon, sir.
Good afternoon. Good afternoon. So we'll be
Mm.
starting in just 2 or 3 minutes. Lot of other
Yeah, yeah,
people
yeah.
are
Okay,
messaging,
okay,
right?
okay.
Once they are
Done, done,
joined,
done.
then we'll start, right? And again,
Yeah.
apologies for from my side for starting this session delay because we are facing
No, no. Welcome,
technical
welcome.
glitch, right?
Yeah,
And then we'll start, right?
yeah, yeah.
So
Of course.
right now, I hope my screen is visible, right?
Yeah, now it is.
It is visible, yeah.
Clear.
Okay, okay, okay. Because lot of people
Mr.
are
Anurag,
right.
can you able to put today's agenda so we will understand what
Yeah,
are
yeah, yeah.
the today's coverage?
So So why we are taking this webinar, right? So in this webinar, today I'm going to give you the 7-step process how to trade in gold, right? And this 7-step process are coming from the hedge fund industry. So the big institutions who are trading with very advanced tools with very big ticket sizes, how they are managing their positions, right? What steps they are following, right? What is the mental mindset required if you are totally into gold? Because right now the 80% volume in the whole globe is coming out from gold, right? So what is the right approach? How you are going to start your day? What is the first step you're going to do? And after that, what are the other 7 steps, right? So this is a complete approach, right, which consists of 7 steps. And I've given a lot of techniques and strategies. So starting from deciding your biasness, from there to managing your risk if you're stuck in your positions, if you're trading on a very volatile data, just we have seen on 10th of December a very big move, right, like Fed decision. In that scenario, how you're going to take your trades and how you're going to design your contingency plan. If something bad happen, then what you need to do, so everything will be covered, right? So we'll spend very less time on the slides, but more time on the charts and all, right? But before that, I just give you the ideation that how we are going to proceed in this webinar. Okay, so this will be the agenda, and this will be the breakthrough for lot of traders, whether you are a professional trader having experience or you are unexperienced. It is useful for each and everybody. I am sharing lot of other tools and information which I personally use, which I have seen in the hedge funds, how they use and how they use that data, that information in taking their decisions and all. Okay.
You hedge funds in the mean you are telling institutions, big institutions.
Institutions, right? Big
Okay.
institutions, and
Hedge. Hmm.
especially they have their trading flows, right? And how they accumulate, how they used to trade on a daily basis, how they take their decisions and all, right? And once we start this session, I've been discussing these slides and all. I want everybody to first listen, and that after each topic is covered, I'll take your questions, and in this way, we'll approach, right? I want this session to be interactive, so I'll take all your questions and all. Okay?
Appreciate.
Okay. So there are a lot of people are in the lobby. Just let me in.
Recording in progress.
Okay. Done. Okay, so I think now everybody have been entered. So once again, I welcome everybody and I request everybody to mute themselves, right? So today I'm going to show you how exactly hedge fund.
Mr. Anurag, you are off. Your screen is visible. Your audio also not visible, not listenable.
Yeah, you mute actually.
Hello, Mr. Anurag.
Yeah, yeah. Okay.
Yeah,
Now I
now okay.
think now my audio is also clear, and I
Yeah.
hope my screen is also visible, right? Because lot of people are continuously waiting in the lobby, and I'm just they are entering, so I don't want them to miss the information and all, right? So let's start. Okay. Now we don't waste any time, and just we start with the session. So once again, I welcome everybody. So today I'm going to show you how exactly the hedge funds trade gold, right? Systematically, mathematically, and with a structure that almost no retail traders use. What you will learn today is based on the guess is not based on the guesswork, right? It is based on the institutional framework, what kind of risk protocols they are using. Okay. And by the end of the session, you will be have a 7-step blueprint that can completely change how you think, approach, and execute gold trades, right? And whenever you guys have any questions, so just after the any
Sorry,
slides I
Mr. Anurag. Again, there is echo, full echo.
क्या हो रहा है ये?
Lot of echo
now
is
it's
coming,
clear.
Mr. Anurag.
Now it's clear.
Now okay.
Okay. Now I want everybody to just unmute themselves, right? So let's proceed. So this is the agenda, the purpose of the webinar, that what you're going to get into this presentations, because you're investing your precious time, right? And it's my duty to justify that time which you are investing with me. So I'm sharing lot of informations, right? Probably there are a lot of people who already know lot of things, but today I'm going to give you a lot. different things and a very whole new approach that how to process that data and information, right? So we'll cover each and everything. After this, you guys won't require anything else. What resources I'm using, I will provide all the details, each and everything, right? Okay. So first of all, we'll see that how the hedge funds create their directional bias, right? Just before hitting, we already consume lot of information and news, right? So how to select what is the best news and how to connect that news with the chart, right? So we have a clear biasness, and why we need that clear biasness, we'll discuss that, right? Then we see the fundamental data and connect the whole dots and design our hypothesis, right? Then we discuss about the risk management, trade management. That means how much lot size you should take according to your account equity. Is there any mathematical formula to decide the lot size to trade in gold, right? What is the handsome equity you require if you are really want to trade into gold? We'll discuss this thing. If anything happens, right? If you are holding any positions, how to secure those positions? That means creating the insurance or a cover for those positions, right? Because gold is not a thing in which you hold sell positions for a very longer period of time, right? We'll discuss each and everything. If any miss happens, right? If anything happens, you've booked very big losses, or all of a sudden there is a very volatile movement in opposite direction of your trade, how to manage those position, and instead of booking the loss, how you can get out of those position at a break even, right? Then if you face losses and you want to recover that losses, right, in any of this script, and you want to recover that losses from gold, then how you need to design the contingency plan, right? What is your plan B should be there, right? And combining all this information, how you can design a repeatable trading system, right? So if you are winning, you just need that whatever you have done on that winning day, you need to repeat the same process again and again, and the winning percentage or your accuracy will give you the great results, right? And consistent results. So use case I've given over here, we already been discussed, right? Before we start, my goal in this session is not just to teach you how to take a trade. It's teach you how hedge funds think and how they structure their decisions, right? So we can also adopt the same thing, right? If we follow this thing, right? And those who have joined lately, just a reminder that I can take your questions in English also, in Hindi also, right? But I will answer the things in English only because majority of people have English. But if you're not comfortable, then ask me in Hindi. I'll give you the answer in Hindi. Okay. And after each session, I'll just open the session for taking the questions and all. Okay. Okay. So this is a 7 step process, right? I hope that everybody is having notepads or digital notes, right? Or they are making the notes. I want to write it down lot of things because I don't want to stretch this webinar, right? And I want all of you to take all the informations, and whatever doubts or questions you are having, just write it down, right? You can use a cornell method for that. Just divide your page in 4 different parts. Whatever new terminologies you heard for the first time, write it down in the first quadrant, right? Whatever doubts are coming, write it down in the second quadrant. Whatever new things you're finding, write it on the third quadrant. And whatever resources I am giving, write it on the fourth quadrant, right? So let's proceed. Okay. So the number one process. First, we'll discuss how to generate the biasness. That is our step number one. Then the step number two is how to read the fundamentals, right? That means the fundamental analysis is the step number two. Then the step number three is the technical analysis. Then the step number four is understanding the psychology of ours or along with the market, right? That means how to do sentimental analysis, from where we'll get this kind of data. So this is the fourth step. Five step is the risk management part. So I've divided the risk management part in 3 points, right? Creating hedge, creating insurance, and the contingency plan, right? Now let's move ahead. So Why retail traders lose and hedge funds win? When I use the word hedge funds, that means institutional traders, right? Those who are working for brokers, those who are working for big institutes, those who are working for big Goldbergs, those who are working for ETFs, mutual funds, right? What they do and why they are successful and why retail traders are always losing money, right? According to the industry data, 90% of people lose their consistency within 90 days of their trading, right? And that's the reason majority of retail traders are not profitable, because every day they have a new strategy, new approach, and that is the reason they are lacking, right? So here are few points, right? Because retail traders generally totally rely on technical charts, which is very wrong, right? No biasness, they trade anything, right? And from anywhere, any level. Second, there is no emotional decision making system, right? Lot of people make videos, provide content, that how you can be emotionally intelligent, right? But nobody teaches that. But we'll discuss this thing, and I'll give you a very simple thing, right? Whenever I talk about emotional thing, that means your biology is involved, your physical body is involved, and your body will give you the hint that right now you're in a right state of mind or not, right? Over leveraging, we don't understand leveraging, we don't know any optimal function to decide a risk exposure, right? Incorrect risk taking, panic and volatility, no insurance of positions, right? That means no cover calls, no contingency or recovery plan. If something bad happens, then the revenge trading strikes in mind and we start taking trades, and that too very volatile trades, right? And no focus on entries, no pre-decided exits, and lot of FOMO, right? So we'll discuss everything, right? And for this, for the hedge funds, they have systems for each and everything, right? But after this webinar, everybody will have the same thing, right? Same approach for each and everything. We have a system, and it is a system which is very much easy and anybody can follow it, right? But it requires your discipline, right? And you have to make your mind that you have to follow this thing, and I can assure you that I'll give you the challenge to make loss if you have this system and follow this system, right? Now let's start with the thing that how the hedge fund approach, right? What are the bullet points, right? How they structure everything. So we'll take practical examples, see the news, and then step by step we start deciding that thing, right? So just to give you an idea that this over here I have given the biasness, which is your idea generation, right? This is the most important thing. Every day you should have a routine, right? At a specific time when you need to feed your brain with the right information. Now you need resources, the right resources from where you need to feed those data. I'll give you those resources also. So that's the reason I've given, right? Because in this market, if we all see the charts, somebody will see sell and somebody will see buy, right? So this is a market and it will give signals to all the biasness, whether you are towards the buy side or towards the sell side, right? You can find your thing because already you have decided your biasness just by looking at the chart, any telegram news, any signal or anything. So we need to avoid that. Second thing, the fundamental analysis. If you talk about fundamental analysis, lot of people only discuss that interest rate come US data. No, this is not the only fundamental data. If you are not including the supply and demand data of gold, your fundamental analysis is not correct, right? It is half done. So you need to see this thing. Then we are going to spend majority of time on this part, which is the technical analysis. We are going to discuss lot of thing, and that will be a very interactive session. I want everybody to ask me, we'll discuss this thing. I want to understand your story, your problem, and we'll find the solutions right away, right? Because within the maximum time we can stretch this webinar is 2 hours, right? So for 45 minutes, I am demanding your time. So I should speak for the 45 minute and provide you the content, and rest is all your questions with practical approach, right? But one by one, you need to raise the hand. I'll take your questions and we'll start, right? Then we discuss the psychological and sentimental things, right? I'll give you two, three things, right? If this thing happens, you have to trust whatever I'm providing you in this section, right, which is the psychological and sentimental analysis, and your body will tell you that whether it is the right time to trade or not. Okay, then the risk and trade management. So these are the risk. We have the slides for this, right? But instead of discussing lot of things on the slide, we'll open the Excel and we do the calculations. So if anybody have booked the loss, taken any positions, how to hedge that, we do it mathematically and step by step, so you can take the notes, right? Then I give you the hedging techniques. There are different kind of techniques to hedge your position, right? That means instead of booking the loss, you are getting out of the market at a break even, right? And in the last, the contingency plan, right? So I'll give you the framework in this, but according to your risk appetite, you need to design that plan. Okay. Moving on to the next slide, and here the core of our today's agenda starts, right? The first topic, which is the bias generation, right? So before you trade gold, you must decide who controls the market today. When I'm telling you who, means sometimes retailers are heavy in the market, and they have the edge in deciding the direction of the gold. Yes, this is the truth, but these days are very less, right? And on the other hand, then we have the institutions and the swap dealers, right? Very few people understand what swap dealers do, so we'll decode that, right? Then to provoke you, if somebody have taken a very big position, I'm talking about hedge funds and big banks, right, and the producers and merchants of gold, if they have taken any position and they want to square off or want to manage their portfolio, they publish or they fund or sponsor lot of news to provoke selling in you or buying in you, right? They trigger your psyche. How they trigger, we'll see it practical also, right? So that's the reason I've told you that when you see any news, try to understand that what is the hidden catch in that news, and I'll give you that thing also, right? So the direction in which the smart money plus the macro flow is moving, that is the clear direction, that is the primary trend of the gold, right? Without a clear bias, every trade becomes a guesswork, right? And majority of us do the same thing. Even in my starting, right, I also do the same thing. Every day I have a new approach, right? A correct bias goes with three things, right? Filter your entries, avoid trading against the big flow. I'm not talking about the trend, I'm talking about the macroeconomic development, the geopolitical events, right? Then the reduce drawdown by 60 to, if you do this, it will reduce your drawdown by 60 to 70%. That means your win ratio is going to increase. Align with your hedge fund with, so whatever system we are designing, you need to align everything with that system, right? How to generate biasness mathematically, fundamentally, and technically, right? So over here, the first thing which I've given you is to see, forget SMC, forget everything, just forget everything, right? I want you to unlearn everything and now understand what I'm giving you. Just follow the simple basic rule that you need to identify the higher high and higher low formations, right, which is the basic Dow theory thing, right? And you need to identify the market structure, right? So this is your technical point. After this, once you identify this, you need to draw the important support and resistance area. After that, you need to see the news. What is the right source to see the news? I'll give you, right? In the last section, I given the exact website details also, right? So those who want, they can write it down. Trading economics is the best, right? Second, World Gold Council Market Insights. It's free. Whatever I am giving, everything is free. Just go to the World Gold Council report. You have the total demand and supply, right? It will give you that how many companies. Nobody, I am 100% sure that nobody give me the name of a single company which is listed in Dow Jones, which is a gold miner, right? Or a processor of gold, right? Nobody. If their earnings are increasing or decreasing, they are telling us a lot more thing than technical charts. So all these details we can find on World Gold Council report, right? So Then comes the dollar, right? Because dollar is the most important currency. So first we need to analyze the dollar, and we just need to see the biasness in which direction the dollar is heading, right? We'll not see very volatile movement in dollar. So here we use a simple moving average system to see the strength of the dollar, right? And if we are intraday player, then we will see that on a 1 hour time frame. And same, we mark the high, low, and design the market structure and which direction the market is heading. Suppose the dollar index is telling you that it will go down. Then you need to see the data. What are the upcoming data? And if this data is uh, the figures of the data which are still pending to be released, right? If they surprise the market, is it is being supported through your technical thing also, it is in align, right? It is in sync. Is there if there is an any kind of anomaly, you need to mark that today they are going to design a trap. We'll see everything practical on a chart also. So here I've given the rule. So if dxy is increasing, gold has a bearish bias, right? Bearish bias means it doesn't mean that gold is going to go down. That means if gold is going um, upside with very strong momentum, the momentum is going to get slow, right? So your patience will be tested. The size of the candle would be small, right? And very slowly, the sluggish movement you will see in gold. Slowly, it will go up, right? So this will tell you, right? Same, the vice versa case, if the DXY is going down, that means the dollar is going down, gold is going up, right? Why this happens? Because if dollar is giving you very high interest rate, right? So instead of investing in an asset which is not yielding, right? People tend to invest in a high yielding assets, which is the dollar denominated uh, assets. Maybe it's treasury, maybe is the stock market or the companies which are from US. So people tend to invest in Meta, in Tesla and everything, right? So it is being correlated. And we have the free correlation calculator also, through which we can correlate this. If the correlation is more than 0.70, right? Correlation is always between 0 to 1, right? If the correlation is above 0.70, that is the day you can see the relation between the dollar and gold, and that is the right day to trade gold. Otherwise avoid it. Okay. Then we'll mark the we'll see the real yields. That means the 10-year and 2-year treasury yields, the same thing which we have discussed, right? If government is giving you fixed income, right? So why you would invest in any kind of riskier assets, or even on a non-yielding asset like gold, silver, right? So this will have an impact. So over here I've given the prediction that how you are going to interpret, right? So why I've used 10-year, because on a longer term period, if people have more trust on US, so they will divert. I'm not talking about the retail traders, I'm talking about the central banks, I'm talking about the big banks, I'm talking about the big business tycoons, right? They do their treasury operations and they buy government bonds because they are getting fixed income. Same goes with institutions, mutual funds and all, right? They tend to invest in this, right? Although the 30% of their portfolio is being invested into fixed income assets. So you need to keep in mind, if they are changing, if they are doing something, we need to adopt the same thing, right? We need to sense it and need to make changes into our trading system, right? Then we'll see the liquidity zone. So we'll talk about the fair value gap, which we call the imbalances, right? Then we identify the footprints, that means the liquidity pool, how they design it and how to catch it, right? So we'll discuss on the chart, right? Then the bias confirmation list. So you should have this list, right? So we've been using a news, we are identifying the trend, right? We are seeing the dollar index, we are seeing the bond yields, right? Then we'll see the commitment of trade report of data, right? COT data we will see. So net speculative positions. If out of this five or six, right? So you can adopt according to you, right? And the news. If you have four tick out of five, that means your biasness is correct. You can take the trade into that direction which your biasness is saying, right? If you're all these things, right? If you have seen the price are making higher high, right? Dollar is falling, yields are also falling. That means the interest rate cut, right? How we'll see this? I'll tell you. There is a tool which is called CME Fed Watch tool. Every day interest rate derivatives traded, right, into the CME market, which is the Chicago Mercantile Exchange. If their sentiment changes, probability changes that in the upcoming FOMC Fed meeting, whether there is an interest rate cut or not, right? If the probability is increasing of a cut, DXY and rent yield is going to go down, it is a good sign for gold, right? So in this way, you need to decide your biasness, right? And commitment of trade report is a weekly data, right? Over here, you need to see the data of only dealers. Who are these dealers? Swap dealers, right? If you see any video, they will tell you that only focus on the non-commercial part or see the only management your hedge funds. No, you need to see the swap dealers. Swap dealers are like the insurance provider for producers and merchants also, and for the big institutions who buy physical gold like JP Morgan, Morgan Stanley. They tend to buy gold from central banks. When central banks need money, they buy the gold and they give the liquidity to them. Liquidity means new currency, and then Fed print new money, right? And the whole cycle repeat. Now, the second thing, which is very much important, is the volatility mapping, right? It is your step number two, right? And how to, so we are not, I'm not going to waste a lot of your time into slides. Just we need to see that what kind of mathematical calculation we need to do on our side, right? Just after this slide, we'll go on a chart and do the same calculation and place it on the chart, and you will be surprised to see. So in this, price moves because of volatility, not because of indicators. Okay. Now, what is this volatility mapping, right? So it will tell you where the gold is likely to expand or contract. And if, suppose if you're trading in the US session, how much the gold have given the movement and how much margin you have left. So accordingly, you'll plan your trade, right? Why it is critical? You can see that volatility can come because of any news, because of any event, any liquidity hunting, right? And the volatility expanding. And if we can catch this thing in advance, right? So it will be very good. And we can do it mathematically, right? In the next slide, this is the formula which they use, right? So they use the ADR thing. That means, suppose if I'm using 9 periods of data, suppose you have seen a spike, right, this kind of wave movement, so you just need to take that impulsive movement and count the number of days, how many days the gold is going up, or how many days the gold have taken the correction in a uptrend. Just take that number, take the high and low of that number divided by the number of candles you have counted, you'll get your average daily range, right? If it is very complicated for you, so we have a separate tool which is the ATR. Okay. Just after this, we'll mark everything on the chart, and you'll be surprised to see that how the market is reacting to that, right? So we can use ATR also. By default, we have ADR indicator also, and by default, the setting is 14. But I am suggesting you to use 9. We will use the 9, right? If gold all suppose if the ADR value is $28, and when you are sitting in front of the screen to place your trades, gold have already given the movement of $20, right? Either in upside or downside. That means only $6 of movement is remaining. After $6 of movement, there will be a correction in the prices, right? So we'll see that, right? And this is the session based volatility. As if we calculate this volatility thing on a last 30 years of data, so the most aggressive, right, or when the trend reversal happen is the New York session, and the highest volatility or highest volume market activity is at the London, right? And Asia is the compression. That means Asia will be sideways, then we'll have a upside or downside movement in the European session, and then we have the reversal in the New York session. So this is the normal thing, right? This is the normal style how the market volatility react according to the session wise. So it is a very important information. Now I just shared the screen and we'll see the practicality of this thing, right? So just give me a moment. Let me share you my screen. So we'll calculate on daily also, we'll calculate on hourly also. Okay. I hope my screen is visible to everybody, right? Okay. Okay. Now, what I need to do over here, that this dotted line, this is a H1 time frame. Okay. H1 time frame. So this is the start of the day. This is the end of the day, right? Now, suppose one, two, three, four, five candles are for the Tokyo session, right? But suppose when this candle is under construction, right? At that time, I hit my screen and I want to take a trade, right? But before that, I need to see that how much movement could I get today, right? What is the possibility? So what I'll do, I'll just go to this level. I'll see the oscillator, and over here you have the option which is called average true range. Is it visible? I'm placing it with 9 period, right? Remember 9 period. Now this indicator is visible. Okay. Okay. So at this point of time, I need to see that what is the value? What is the value of ATR at this candle? So I'll just place Control D, right? So a new window will pop up and you can see the ATR value over here. Okay. Whenever I place a cursor at any candle, the ATR value of that candle would be given over here, right? Now, over here, when I place the ATR value is how much? 17. Correct? Okay, now what I need to do once this candle is closed from this close price, right? From this close price, remember from this close price, I need to add 17 and subtract 17 and design the horizontal line. And let's see that how the market is reacting, right? So this is the close price, right? This is 4269. I add 17 into this. So it will be 4279 and so 427, 4286, right? That means over here. Okay. Then I add 17 again. Is this lines are visible? Let me make it bold. Okay. Okay. Now 17 points from above this. So it will be 4325, right? If I add 17 point, maybe here, right? If I add 17 points more in here, so it will be 327. That means 4449, right? Here, right? Now see. I haven't done anything. Just I've drawn the ATR values and see how the market have reacted. And it has given me 3x volatility in gold. So right now gold is in very strong momentum, and whenever you are placing any trade, remember in whichever time frame you are using this ATR, and you need to decide your stop loss, right, or the exit point or entry point. ATR will give you, and how much ATR value you should require. 3. That what is whatever is the ATR value of the starting of the day from here, 17 points of quarters of movement you'll get, right? After that, chances of reversal is high. So instead of taking trade in between of this, you should wait for the prices to reach this level. And if here the prices are going upwards, then take the entry. This will be your next target, right? If this candle have given us the close, place your buy limit from here, and this will be your next target, right? And see what happens at this ATR value. Prices try to reach this. I haven't seen any chart, I haven't seen anything, right? No, we are not discussing candle, just we have taken the first candle ATR value and just drawn the line and see what happens. Now the thing which we have done in 1 hour, you can apply it on daily also, you can apply this on weekly also, right? And then draw H1 also. If the ATR value of daily and ATR value of 1 hour are aligning, it will act as a strong resistance or support. That means, yes, you can place your orders in advance, right? So this is the current day for which we have done. Now I'm waiting for the next day prices, right? Then when this first candle happens, right, because all the major banks, all the trading flows, especially the hedge funds, are active at this point of time. So we'll take the ATR value and design the line, right? Although if we want that on the very next day, on the Monday, what kind of movement I'm getting, and if I want to trade at the morning, that how much ATR we can get, right? So I can take this candle's ATR value and see this candle's. Although this candle is very small, but the ATR value is 24.93, almost 25 pips, points of movement. That means if I draw lines from this to this, right? So this is the close price, right? So if prices goes up from here, so the next target will be at 4325, right? If anybody wants to note it down, note it down. And Monday, see the magic, right? If I subtract 25, the ATR value, if I subtract, then it is 4275, right? Over here, right? Now we'll see that the market will start if market have given me a gap up. If prices went down, then this way area will act as a strong support and push the prices upward, right? If prices went upwards, this is the area where high probability the prices is going to reject. Now we combine this ATR lines along with the technical things. So if I see over here, right, this is the order block. Lot of people will identify this as a order block, and at the same level we have a very big fair value gap, although the prices are in that fair value gap. But when the prices reaches this level, I have my ATR resistance along with order block, so the probability of a reversal from this area is high. Okay, so this is the thing. This is the way you need to use your ATR value in advance, right? Suppose if any of you, right, came after the office and in the evening this candle is making, right? This candle is being under construction. Now what you need to do, wait for the prices to come and test the ATR value. Once it is done, then plan your entry. Don't get into FOMO. Right now, if you see, you over here we have the previous day's ATR, right? And prices get rejected. Now there is high probability that it is a reversal, right? Right now we can use other indicators for second confirmation that whether we have a selling or not, and at till what level it will come. Now see, this is the first ATR value which we have drawn over here, right, from the close price. Now see what happens. Prices test this level, went down, then again move up, failed to give me a close. I can see that this is the right time. If I've taken the sell, book the profit and get exit. And from here, the reversal happens, right? So this is the way to use the ATR, right? And if you want to do it mathematically, so you can calculate the average daily range also. For the ADR to calculate, what you need to do, you need to select, first you need to come at daily, right? So this is daily, I'm removing everything, right? And I am using a single color chart. Okay, so it's not being suggested to everybody, but if you really want to understand the price behavior very well and try to understand when emotions came, you need to remove colors from your life. That means from your chart, right? If you are using colors, colors will provoke you, right? Now I don't know anything, which candle is red, which candle is green. I'll just see the price action, right, with very purity, and just mark the trend lines and the support and resistance. That's the reason I'm using black line, but it's not being suggested. Okay, so now we have this consolidation over here. 1, 2, 3, 4, 5, 6, 7, 8, 9 days of consolidation, right? So what you need to do, you need to calculate the high, take the high and take the low of this day, right? And we have 9 candles. Add this divided by 9, whatever you are getting is your ADR value. Okay, that will be your ADR value. That means whatever next price movement will come, it will come in the ADRs, right? Whatever we are going to calculate. So in this way, so focus on the consolidation area and then calculate the ADR. Okay. Now back to our presentation. Okay. Now I hope the screen is visible, right? Okay. So we have discussed this thing. Same thing. I've given lot of other mathematical things also, right? So we've been discussing the event based volatility. So whenever you have the CPI data on TradingView also and on the broker platform also, you'll get that on the CPI how much prices have reacted, and just take that candle calculation to calculate your volatility. How you'll do that? Just take the ATR value of that candle, right? And after this, you'll see that market is going to respect the same range. Say over here, I've given the rule, never enter fresh positions before the high impact news, right? Expansion. So the lines which you have drawn are called the expansion zones, right? After the data release. If you want to use any other indicator, so you can use Bollinger Band, right? Over here, I've used the ATR value of 9. So you can use the Bollinger Band with ATR 9, but you will need to take, we have seen the ATR value, the prices have given 3x, right? That means 3 is the standard deviation which you need to take. So take ATR value of 3 deviation and ATR value of 2 deviation, and you will see a band, right? A upper band and a lower band of 2 and 3, right? From there, if you see any kind of rejection, take sell, then only take the trend reversal trades, right? If you want to calculate it mathematically, right, so you can do, just for your knowledge sake, I've given the maths already. We have those indicators, so we don't require to calculate it, right? Now moving on to the next part, right? So the volatility rule, and the rule is rule, right? You have to follow it. Okay, biasness is bullish, price at London Open, ADR is 28, expansion target I've given, right? Exhaustion means if prices getting rejected or getting down. So this 28 points of our expansion is expected into that moment, right? So use this ATR always, right? Lot of time this happens that we have taken the trade and all of a sudden it went in the opposite direction and we don't know whether to book the loss or create a hedge, or I have taken a buy, let's open a sell, and as soon as you open a sell, price is again going upwards. But if you use this value, it is not going to happen, right? Because every time, right? So there is a limit to price movement, right? Very few time in history it happens that gold have given a $50, $60, $80 or $100 of movement on a single day, right? It happens very rarely, right? And that too, if you find this kind of happen also, then too the ATR value is being respected. You know, if you have $100 of movement, there will be a ATR value, right? Line is uh, waiting. Once the price tests that level, prices is going to get rejected. So you don't get panic just by seeing the price, right? And instead of sitting with a hope that it will going to get reversed, you know the exact points from where the probability of a reversal is very high, right? So high volatility means high opportunity. No, this is not correct. High volatility means high risk, right? Whenever there is high, so we have seen that every day you're using the ATR and every day the gold is giving you an ATR value of 10. But all of a sudden, I don't know what happens, and the ATR value on a very small candle have become 25. What it is telling me, that if I'm trading with a 0.20 lot, now it's time to reduce my lot. And what is that value? How much should I remove my the trading lots? So according to the ATR value, whatever uh, lot size you're using, divided by the ATR value. ATR value means the how many times it have given me the movement. 3 times, right? Divided by 3. right? And whatever you are getting, that means 0.03, right? Trade with that lot on the high volatility days. And when you will have this kind of data on NFP, CPI, employment, initial jobless claim, right? PC, GDP data, FOMC meeting. Okay, so you need to focus on those data and you can use this thing. Okay, moving on to the next. Now comes the fundamental part, right? So over here, I'm going to speak a lot, right? And I'll share you a lot of very good information. And this is the main or the juice of this webinar, right? Because this is the thing which is least available on uh, systems, right? On Google. Even you ask ChatGPT, it will give you the wrong prediction. But today, I'll give you the right way to interpret the fundamental data, right? So over here, before I start this thing, I've given you the gold market structure, right? Those who want to take the snap of it, they can take it, right? And those who are the existing BMN client, just message your relationship manager, you'll get this PDF, right? So you know that who, when I talk about institution, who the hell are those institutions? Over here, you can see those institutions, right? That how the gold market works, what are the parties and the intermediaries are involved, right? So I've given over here, right? And this is the data which I've given, right? It is the current data. The data for 2025 is going to release in 2026. So this is the latest data, right? So the total annual demand for gold is 4338 tons, right? And I'll show you that how much central banks have bought and why the gold is going up. So retail traders, we are not behind the gold move, right? Central banks are behind the gold move. And why they are behind the gold move? That is the point of analysis. This is the point on which we have to do the research. If we done the research correctly, whenever you have taken any buy, and if it is going in the wrong direction, instead of booking the loss, you can hold that position because very big players are involved and they are pushing the prices upwards, right? What is the reason? I'll tell you in the upcoming slides, right? So over here, I'm not explaining this too much. Over here we have the exploration company who find gold. So you need to see the performances of those companies. If any company find a new gold reserve, right, you will be surprised that if I make a cube of 22-meter, right, length, height, and breadth, right? That is the total gold we have till now in the whole globe, right? It's very small, and still the people are finding, right, the gold reserve. They find it. New reserves, and they are increasing their mining activities, so their capex is going to get increased, and on the other hand their profit is also going to get increased. So instead of taking only seeing the technical charts and taking the buy position, you should see the performance of those companies. These are the very big companies which are listed on Nasdaq, which are listed on Dow Jones, right? S&P 500, they are the part of those companies. So you need to see their performance also, not regularly but on a quarterly basis. So it will give you an idea whether right now production is more or supply is more, right? If there is a gap between the demand and supply, it is an opportunity. Whatever the technical analysis is telling, whenever you see a dip, take a buy, because fundamentally market is going to move in your direction. So you need to understand this, right? So take the snap of it. So I've given the annual supply, I've given the annual demand. So 4771 tons of supply we have, and over here I've given the demand. Now the supply is more, then too the gold is going up because central banks are accumulating almost 70 or 80% of gold. But we need jewelry, right? We need coins, right? So that's the reason gold prices are. So why they push gold prices? Not because they want to earn profit just by this news that central banks are bad. No, they know that we are lover of gold, right? Whatever we earn, we will buy physical gold, right? It's a human tendency, and gold is the only thing which is acceptable in every religion in terms of accumulating wealth, right? Not in terms of jewelry and all. Okay. So, next is the gold trading over the counter exchanges I have given over here, right? So, like we have the biggest, the ounces. Why we have lot size in ounces? It because of the London Mercantile Exchange, the London exchange which we have, London Metal Exchange, right? So this is the one of the biggest over the counter exchange, right? And 70% of the value of gold is being traded on papers, right? That is ETS, OTC. CFD is also over the counter, right? Instrument derivative, right? So we need to focus. And after a while, once the gold crosses the 5,000 ounces, right, price, you will see that very few people will afford physical gold. Then all of a sudden a shift will happen and majority of people will invest in ETF, gold ETFs, because they are not able to buy physical gold, because earning is not increasing that much, the gold price is increasing very much, right? So they, instead of taking a physical buy, they don't have that much capacity, so people will invest in gold ETF, right? And everything is planned, right? Everything is planned. You will be surprised to see the size of the ETF industry, right? These are the hedge funds. These are the institutions. You need to understand and why they are pushing the prices. Although US is also playing a very important role. So over here I've given this thing and how much is the volume of each exchange. So we have the comics from the US, right? 72 billion. It's a 1 year of value, 72 billion worth of futures and options have been traded in US, just in US, right? So we have lot of liquidity and lot of volume over here, right? Moving on to the next part. So I won't think that I need to discuss the purpose of fundamental analysis because it is very much important, right? Lot of time this is going to fail, right? Technicals are going to fail but fundamentals are not going to fail. If any central bank want to buy gold, and if the gold players know this, they start accumulating gold, right? They don't care about the head and shoulder or any your SMC or anything, right? They just start accumulating gold and they will sell this gold to those central banks, right? And this way they, and who are these players? JP Morgan, right? Just search on Google and you will see that JP Morgan have bought gold from US government, right? And given them the liquidity to do the quantitative easing, right? Because they have the debt crisis. To settle the debt crisis, they need to have gold. So right now they have 868 million tons of gold, right? Right now into their Fort Knox, into their reserve. If the value of gold is going to increase, so previously they have the value of the total gold which they are holding is 1.1 million something dollars, right? 1.1 million thousand something, and right now it have become 1 trillion just because they have pushed the prices to till 4,000, right? If they do this and if gold prices become 10,000, then the debt cycle, the debt crisis which they are facing, the US government is facing, is being settled. How? Suppose the China have lot of bonds of US, right? And they want to settle this bond. Either US have to pay them the interest and settle the trades, right? Because they have invested in their treasury bonds. Now US government have to pay the interest. And this is the reason of a trade war between China and US. So what China is telling that if you are not able to settle these contracts, these bonds, I'll sell these bonds to Russia and then you'll settle with Russia, which US government doesn't want. So they are also pushing the gold. So they have the capacity and that much gold value with their reserve to print new money. This is called quantitative easing, right? That is the reason money supply data, interest rate, all this data are interconnected. If you don't have an idea, you are playing the whole game blindly, right? If you are lucky, you will be in profit. Otherwise, the probability of losing money in this market is very high and consistently you will lose. And I know that majority of retail traders never seen consistency in their life, right? Just show me 30 trades and you hit stop loss or target. I just want that any every time when you hit the target you're getting $50, every time you hit the stop losses you're losing $50. In nobody is doing this thing. Till the time we are not disciplined our trading approach, it's very hard for us to make the money, right? And all the other participants are getting richer but retail traders are not getting richer. This is the bad part. This is the thing which you have to keep in mind. And don't worry at all, because for a lot of people they don't have that much time and they can't do such kind of reading in between the lines or news analysis. So on every day we have a Telegram channel which is free. right? We take these news, interpret these news, connect the dots with the goal, and give you the very short synopsis over there, right? There is no charge for that. So instead of consuming information, lot of confusing information from different website, you should visit there and just, so I'll take everything from the market and prepare the dish, and you just enjoy the dish. So you have your correct biasness. Instead of feeding news, different kind of news which are giving you paralysis analysis, just see what exactly we have find, right? And it is better if you do it by yourself, right? The whole objective of this webinar is to make you independent. Okay, now the next part. So the fundamental pillars of gold, right? This is very important. So I want the attention of everybody, right? What are those things, or what are those news? So any news which have these words is really important for you. Any data which have these words is very important for you, right? Interest rates and Fed cycle. Fed cycle means FOMC, Fed decision, Fed speech. It's very important. Real yields. Real yields means 10-year bond yields and 2-year bond yields, right? So suppose if I require money, and if I go to any friend of mine and I say that, uh, bro, I need money. So he'll tell you, I need interest on that, right? And I say that just give me the money. Right now, the market is charging 2% interest. I am ready to give you 5% interest, right? So same the case is with government. If government is ready to give you higher interest on a very shorter period of time, that means they require money. They are facing some kind of turbulence. And if this is happening for US, what it is an indication, and nobody see these data. Nobody talks about this data, right? But if this is happening, that means US government is facing turbulence. And if they are facing turbulence, how the hell the dollar is going to get stronger? No. So there is no chance of thinking of selling gold, because dollar is going to go down, gold is going to go up. If bond yield is right, because money market is a very big market, and nobody, I have never seen anybody on YouTube also, they talk about the NFP data, initial jobless claim. No, why this is the most important data. So 2-year, 5-year, 10-year, that's it. This is a very important data. If their bond yield is changing, the whole global economy is going to make a shift. Okay, so this is very important data. Here I've given the probability, and to see the interest rate and Fed cycle, you need to use this website, which is called Chicago Mercantile Exchange Fed Watch. Probabilities, not opinions, right? We'll see that also, right? And how to interpret that, we'll see that also, right? Then you need to focus on the inflation dynamics, right? Inflation means the CPI data, PPI data, PMI data. All this data will tell the inflation at different level. CPI will tell the inflation at consumer level, right? PPI will tell at producer level. PMI will tell at the purchasing manager level. So it will tell you the raw material are getting costlier or not. So you need to focus on those data also. If these data are showing inflation, then it will have a direct impact on this interest rate decision. And if interest rate decisions are hampering because of this data, either if inflation is rising, interest rate are going to rise. If this is rising, the bond yield is going to get rise. And if all these things are happening, that means gold is going to go down, right? So whatever is the value of gold, 0.70% of that gold is the holding cost for gold, right? So because you need to keep or store gold, so it is the storing cost, right? So 0.70%. So every time whenever gold rises, and if you see a fall or a correction, high probability that correction in terms of value will be equivalent to 0.70% of the gold. And if this is happening, it is not a trend reversal, it is a profit booking. Those who are holding gold into their reserve, they need to recover their cost. So for that, they sell, which we call as profit booking, the short reversals which we have. If the value is between the 0.70%, it is a correction it is a profit booking, right? Not a trend reversal in gold. Remember it. So don't get panic, right? If you see a very big candle fall, right? So don't think that gold is going to go down below the 3000 level. No, this is not going to happen. Right now, gold is in a phase of a new retest. That means every time it needs to raise its financial benchmark. Now, after some time, 4000 will act as a very strong level. We will not find gold below 4000, right? After 2026, you will see, right? 4,000 will be the new, right? Just if I talk about the COVID and all, right? Just before 2 3 years, gold is trading around 2,600 3,000 level, right? Now it is $1,000 above, right? Same thing is going to happen. Lot of fundamental factors are telling us that gold is going to go up. So always, if you find a very good trade in gold, so instead of booking the profit, hold that trade for a very longer period of time. And whenever you see any kind of rejection, right, from the ATR lines, take sell. But don't book gold, don't book buy, right? Hold that buy for a longer period of time. And every time you see the correction, just take sell, take sell. And whatever is the correction, it is going to happen till the ATR value. Book your sell, book your sell, book your sell. And you are holding your buy. That means you're compounding your account just by holding a right position from the right level, right? If you catch the whole momentum, the whole trend you can catch, and you can hold the gold. So this is a very basic example. If you want, you can do pyramiding also. That means layering the gold, taking buy at different levels. You can do this also, right? See the chart and tell me when you see gold is going downwards, right? It is never going to happen. Gold is going to go up always. So if you are really trading into gold, now you have an idea that how much account size you should have. And the simple logic for deciding that is, if right now 1 ounce of gold value is 4370, your account should be at least one ounce of gold, right? That means 5000 you should have that amount. Then use the leverage and then take trades into gold. Otherwise, I ask a very open question to anybody, that show me consistency. You have an account of $1,000 or $800, and you are only trading into gold, and you have grown that account for a 1 year, right? And now you have made $10,000 or 15 or $50,000 from that. Now this is not going to happen. And think yourself like a gold bug. Try to accumulate ounces of gold every time. In this CFD market I'm talking. So this is the approach which you need to follow. Now moving on to the next slide. These are the remaining 2 points, which are the US dollar, right? That means the DXY, right? How to see that, I'll tell you. And this is the most important part, which is the commitment of trade report of data, right? Over here, we have four parties involved, right? This is the most important thing, right? And after listening to this, you don't require anybody else. You can interpret this data by yourself. We have the producers and merchants of the gold, right? Which are the miners and all. Then we have the swap dealers, right? Then we have the managed money, that is the hedge funds, portfolio managers, banks. And in the last, we have the other reportables. These are big traders, right? Not retail traders, big traders. Okay. Those who have taken 100 lots in contract, future contracts, I'm talking right now. Swap dealers, try to understand swap dealers. These are the hedgers and smart money. So suppose if JP Morgan have taken gold, right, and they are holding that gold. So they, if gold prices fall a bit, their portfolio is going to get hamper. So they need an insurance. And for that, they hire swap dealers. The good thing is that JP Morgan is also a swap dealer. Okay. So what they will do, or there are a lot of other small parties, right, who used to trade in this big OTC exchanges. They contact them and they tell them that I have this open position. I need you to create a cover for my position. So what they will do, if they are long, who are long? Producers and managed money is long. So they hedge their positions by creating a short. Okay, so if swap dealers are increasing their short positions, that means lot of people are towards the buy side and they want to accumulate more gold and they are holding the gold right now. It is a good sign. Okay, but most of the time, those who no commitment commitment of trade report data, what they do, they just plus minus and they say the speculative position is very less. How the hell the gold is going up? No, try to understand it. Swap dealers sell insurance. They are like insurance players, right? So they provide insurance to manage money also, producers and merchants also. Now the second thing, producers and merchants. If you are a jeweler, right, or you are someone who sell bullions, that means the bricks, gold bricks to the jewelers to make the jewelry and all. You are holding gold right now. If prices fall, right, so there will be an issue. You want to sell that gold at the same high price to that party, right? To hedge your position, what you will do, you hold 5 lots in buy, so you sell 10 lots of futures and sell just to hedge your position. If prices fell from here, so I'll recover my losses from here. I want to sell gold at the same price. Suppose I want to sell you gold at 4200, and suppose if prices fall by 100 points, so it's a very huge loss for me. On a single ounce I'm losing $100, and I used to trade in tons, right? So what I'll do, I'll sell future contracts. So if they are increasing their future contracts, don't look at them, right? So why they are doing because they just need to save their position, right? Now comes the managed money. When you see the managed money, if they are increasing their contracts in whichever direction, in that direction market is going to happen. If they are squaring off their position, suppose they have 100,000 lots in buy and 2,000 lots in sell, but on the next week what they do, they hold 1,000 lots in buy, but now 1,500 lots in sell. That means in 500 lots they have booked the profit, and just because of this profit booking, the gold prices will take a correction, right? So whenever you see this thing, you need to see the commitment of trade report data, and if you see the managed money is decreasing their sell position, that means they are doing the profit booking. So whatever movement you are seeing, it's just a profit booking, and managed money is behind that, right? And again, if they are increasing the position toward the buy side, take the buy. Whenever you find any dip in gold, just take the buy. Okay. Although there is one bad thing about this data, that this data is going to release on Friday, right? But these parties submit this data on Tuesday. Exchange will do the calculation, and for public, they make this data public on Friday. So we'll get a quite older data, but still it is very useful data. Okay. Moving on to the next part. So over here, I've shown you that this is the current interest rate decision data, and this candle have shown a spike, and we've been predicted into our analysis that from here almost 100 or 200 points of movement you can see, and there is a very big sharp movement over here, right? So why this fundamental data is important? Because they have cut the interest rate, the bond yield will go down, dollar index have gone down, and see what happens. And at the same time, those who are taking trades on the basis of patterns or SMC or XYZ, they have identified this market structure, which is a head and shoulder, right? Those who are trading on a smaller time frame, for them this is very promising thing, right? But what happens, it is a trap. All the stop losses which are resting above it, right, are the liquidity traps, have been wiped out in this position, right? Then again it have taken the correction, and when you calculate the ATR value, you'll be surprised to see this is the exact level of the ATR value, and prices have again pushed up, right? And whenever you see this kind of consolidation, this is the time you need to see the commitment of trade report data, that what they are doing right now. So they are booking their profit at that point of time, right? Okay. Next is technical analysis, right? So we are not going to discuss this on the chart, just we have a very quick look, and now we'll discuss each and everything on the chart, right? So what hedge fund do usually, what kind of tools they use, this is the thing which I want to tell you, right? First of all, this is non-negotiable. What? Market structure. I'm not talking about the market structure of SMC and ICT, just the basic market structure. And I'll give you the tool to identify those market structures, right? Then you need to see the institutional levels. For this, you can use pivot point, right? Pivot point or ATR values, both are very good, right? Or you can use moving averages also, right? Or previous day high and low. These are very important points. Then the liquidity pool, hedge funds target, right? I'll show you that how to identify the liquidity pool, right? Stop placements, that means where need to we need to take the exit, right? And how we will know that right now institution have entered into the market, and what is the right time that they have started booking the profit, right? So although the technical rules, bias first, consume the right news, understand the fundamental, then the technicals, right? Enter only at liquidity zone, that means from a very crucial level only we have to plan the entry, not in mid of the imbalance. Stops outside volatility, that means according to the volatility zone we need to decide our stop losses. I'm not telling you to put this stop loss, because I'm going to give you the correct system, that instead of stop putting your stop losses, what else you can do, right? Then the partial profit, you should position size your profit, right? If you have taken a lot and it is in profit of 10 points and 10 points is of your SL, you should book almost 20 or 30% of your position, right? And or you do the just the reverse, you can book 70% or 50%. That means you have taken one lot, book profit in 50 lot, and then revise the SL at the entry price and leave it. Okay. Trading psychology and sentiments, I'll tell you the data from where the Fed watch tool data will tell you, right? How to do this, right? How to identify the trading. So market sentiment is easy to understand. There are a lot of tools available. The trader psychology is the most complex one, right? And whenever you're trading, right, remember, if you're walking on a road and if you remember that I have a $5 of note and I missed that note, if this thing bothers you, you go back and try to find that $5. That means $5 is your risk appetite. So just try to ask these questions to yourself, that how much money if I lose, right? I will not invest my time to find that money. If it is $10, be it $10. If it is $20, be it $20. That means this is your risk appetite, and accordingly you need to decide. Otherwise, if you risk too much, suppose if $100, if I lose $100, I'll make whole my room messy. I'll do up and down everything to try to find that $100. That means $100 have that power to disturb my psyche, right? But if I lose $5, I don't care much, right? If I lose $10, $1, right? If I talk about dirham, if I lose a 5 dirham note, it doesn't matter, right? Okay, we'll find it, right, later. So if you need to ask that how much is that amount, if you forget or lose, it is not going to impact your psyche. That is your risk appetite, and according to that only choose your risk. That is the best part. So suppose $10 is this thing. If you've taken any trade and if you have booked the loss of $10, nothing is going to happen to your psychology. You will not do over trading. But if you have $1,000 account and if you lose $200, what will be the next emotion into your mind? You have a great urgency to recover that loss first. You'll forget all the system, fundamental nothing. You just want prices to move very fast and you start taking trades. And that is the point your account start depleting, right? So this is the first thing which you have to keep in mind. Second thing related to trader psychology or your emotional control. If you're sitting on your system and if you're taking trades and suddenly a price movement happen, maybe you have already taken the trade, it is in profit, and all of a sudden your breath is becoming shorter. That means you are not in a correct emotional state. Either book the profit, you are in too much excitement, right? Or you are too much depressed or in panic. So it is not the right thing. If your breathing is changing, system will not tell you your emotions, right? But system understand, this candlestick patterns understand how to provoke your emotions. So focus on your breathing while trading. You will notice, right? I don't know how many of have you noticed this, that when you're sitting and all of a sudden the NFP data came and on all of a sudden the price movement, this kind of happens. You try to adjust your sitting, right? This is a sign of getting emotionally disbalanced. All of a sudden your breathing changes, right? And what happens when you market goes opposite into your direction and you haven't put the stop loss, all of a sudden your breathing goes very slow and you just sit very low, right? So if this is happening to you, it is the right time to take exit from your trade, stop the system, go out. Don't take trade, because if you do trade after this market is going to snatch all the profit and all the money which you have given, right? So you need to control your emotions. Nobody can else in this world give you a system or this thing. The two simple things: first, understand what is that value which hit my psyche. Second thing, when my breathing is changing, right? And majority of time we have two brains, right? One is analytical brain, one is emotional brain, right? So what is the right thing? When I open this system, I want to understand that in trading we need a analytical brain or a emotional brain. So if my this nostril is working, my this part of brain is active. If my this nostril is working, my this part of brain is active, right? This is the, so we have the right brain, left brain, emotional brain, analytical brain, right? So we need to understand this, right? If you are in a right state, so it is very technical, and you will be surprised to see if you visit, if you get a chance to visit any of the hedge funds. Although here very few hedge funds trading floors are there, but if anybody get a chance to visit London, go over there, right? There is one guy who is the portfolio manager or the fund manager. He is looking into the trader's eye. If something happens, they'll just stop, right? And every time they have to fill a form, right? Take the sign from the fund manager, then only they are allowed to take the trade. Okay. So remember this thing. This is the most important thing. And if you do these two things, all the emotions will be aligned, right? You have the system and rest everything will be done, right? Next is the institutional sentimental tools, which I've given already. We have discussed all these things, so I'm not wasting time on this. Fear, greed, we know all this, sunk cost fallacy, revenge trading, and all, right? Although here given the psychological trading rules, which is very much important, but remember the two things which I've discussed first. Moving ahead, the risk and trade management plan. So now from here, we are shifting the whole conversation on Excel or into the charts, and I'll give you the calculation and everything on the chart. And that is the climax of our webinar. After that, we'll start the Q&A. Now from here, I want this session to be interactive. So from here, I'm making the transition into the technical charts. Okay. So are you guys ready? Sorry, I haven't seen a lot of people's chat, but now, yes. Okay, Dow is greater than gold mining companies. Okay, so we need to see the weightage. Whosoever asked me these questions, so we need to see the weightage of the gold mining companies. There is not only gold mining company, there are melters also, gold melters also. There are a lot of other machinery companies also which used to provide machines to gold companies, right? We need to see them also, so we can design a whole thematic portfolio into it. If right now gold prices are going upwards, these guys are making very good profit, and they understand it because they control the supply. If they are not going to supply the gold to jewelers and melters and all, gold prices is going to go rise. So we need to see when their profit is increasing, their profit is only going to increase when they will start selling their inventories, right? So just we need to see this thing, right? Although we there are 5 points to analyze any company, right? Although in the last we'll discuss that. If you are more into stocks and all, although it requires a separate webinar because it's a very big thing, but I'll give you a five step model. Like management, you need to see the enterprise value, right? Then you need to see the market cap. So these are the points which you need to consider. Then you need to understand that how the management is taking the decision and what is the future projection plan and how much capex they are doing as compared to their gross profit. Okay. These are the only things, right? So you'll understand the moat of the company. That means the advantage that company is having. You can analyze any company, whether it is Tesla, JP Morgan, any company, right? Okay. So we'll discuss that. Now I'll show you the chart. And from here, I want you to tell me your problems one by one, that you find problem in identifying the chart or in deciding from where you need to place the trade, from where you need to decide the trade, because we have lot of things when we go to bed, But when we wake up and sit in front of the system to take the trade, I don't know what happened. Suddenly, lot of mental fog came, and we are clueless that what we should do next, right? So I'll break all the myth today and give you the right approach. I've given you the seven system. Design this seven system. I've given you this seven steps. You need to follow, make the checklist, do the tick mark, and now you are ready to hit the market. Okay. So without wasting time, let me open my chart. So now you have access to my screen. Now, on which, although it is related to gold, so what time frame you want to use? Now I'm making this session to be interactive, and I'm opening everybody. They can unmute themselves and ask me the question that what kind of challenges they face when they take trade, right? Your questions are a very important learning point for others also. So please, guys, don't hesitate and ask me the questions, right?
Can I ask
Anybody?
questions, Anurag
Yeah,
sir?
yeah, please.
See, when we are taking the trade, we are seeing the lowest price of the day.
Lowest price
Suppose,
of the day. So I'll,
yeah, suppose,
okay,
yeah, 4260. No,
okay.
current price was yesterday's
Yeah,
testing. So,
I'll open this chart. Yes. And this is daily, right? Okay.
yeah. So, some of the time it is not hitting.
Hitting the low,
Yeah, hitting the low. So,
right?
this is my one question.
Okay.
Second question, if I enter of the above, like suppose if I want to take 10 points or 15 points in
Of
the trade,
moment.
like 4 3 4 3 20. Suppose the range is up to 80.
Okay.
4380 is the range of
Mm-hmm.
a day. So if I am
Okay.
entering and from that time the market reverse,
Mm-hmm.
what I will do on that situations
Okay. So
in this two situation?
it is more related to hedging. Okay. So in your query, I can identify two problems, two questions. First of all, we have the high and low of the previous day, but still the
Yeah,
prices are trading between the range of the previous candle, right?
correct.
Correct. So there is no clear direction in which direction the market goes. First, towards the high or towards the low. This is the first question. Second question, if somehow we have taken the trades and if it is going in the wrong direction, then in that case, what should I do? Right? To
Yeah,
get out of that position in
correct.
a break even, right?
Yes.
Although in that scenario, previously, majority of people have to book the losses, but from today onwards, we are going to get exit at a break even point, right? So please, guys, be ready with your pen, note it down. So I'm telling you the right zone hedging method, right? I'm using a martingale. I'll give you other things also, right? It is quite
Yeah,
aggressive and it is not for a smaller account. It is good for a smaller account if you're trading with very small lot. First of all, the first question is that I don't know in which direction the market is heading, right? So I'll mark
yeah,
this, right? So I'll take example of the previous day, right? Just to have an idea. Okay. Suppose I'm
correct.
trading on this trading day and the market start from here, right? And I'll just make it 15 minutes. Okay. So this is the high and low. This is my previous day, right? Okay. This gray area, right? This is the high of previous day. This is the low of previous day. Okay. I don't know what
Correct.
happened in the next market. Now what happened? The day have started, right? Now the problem is that I don't have any reference right now, right? To decide my biasness, to start my analysis, correct? That is the reason I'm not getting. That is the reason you need to identify the market structure correctly. So let's see. I don't focus on that what next movement will come, but just by looking at the previous past history, let me guess that what kind of support, resistance, or important areas we can identify over here, right? So what I'll do, I'll just go to indicators, right? And I use a very simple indicator, okay, which is called fractals. Okay, fractals. Now you can see this fractals over here. This arrow marks, everybody is looking,
Yeah, yeah.
right?
Yes, yes.
Now this day has been started and suppose this two candle have been formed, but I can see this kind of formation. Now what I need to do, I need to take this fractal and this fractal first and mark the high and low. This is the previous information which I have, right?
Yeah, this data is available with
This
us.
data is available, right? And I take this fractal, this swing point and this swing point and draw this. Okay. Now I can see the market is moving in a symmetrical kind of pattern, right? And if I see, so this is the pole, this is the pennant, right? So we have flag and pennant, which is the bullish continuation pattern, right? So the probability of prices going up is very high. But what happened next? This candle made, then again we have a push, then again the next candle have given me a close below the low, right? And it is pushing my biasness towards the sell side, correct?
Yes.
At this point of
Yeah.
candle, because it's a very big candle, right? So I'll
Big
wait,
candle. Yeah.
right? I'll wait for the prices to give me a close below this. Right now, I'm not taking any confirmation. I'm just talking with the candlesticks, right? So what happens? Again, prices went up, correct?
Correct.
Correct. Now, still, I don't have any trade. So what I'll do of this triangle, if of this triangle, I need to draw a horizontal line of the apex of the candle, apex, correct?
Apex center.
Right,
Triangle.
center point. Now see what happens. Prices went down, again went up, and just taken support from the get rejected from the apex, correct?
Yes.
Right, and this is the last swing which I'm having, right, over here.
Hmm.
Right, now I want this prices to, if this prices give me a close below this low, right, high probability that I keep my stop losses above this apex line, right? And take the sell position for a shorter period of time, right? And I'll draw Fibonacci also from for this impulse, right? For this impulse, right? I've taken the high and low and designed the Fibonacci. Now see, prices have taken correction at 23.6 level, then again get a bounce, then again taken 23.6. So the shorter is the reversal, the stronger is the trend, right? Remember it. How to identify the strength of the trend? If prices went up and suppose from here to here 100 points of movement and here only 20 points of correction, that means the trend is very strong, right? If this happens, if prices went up by 100 points and taken a correction of 50, that means right now the momentum is getting slower, the trend is getting weaker. And if this happens, that prices went up by 100 points and taken a correction of 70 points, that means buyers have pushed, sellers have pushed more. So the trend is getting weaker. That means the health of the trend is getting weaker. So anytime, next time, place it on any chart, any time frame. If you identify a good impulse and if prices are taking support from 23.6 or 38.2 and getting a bounce from that level, the next movement is going to be very massive. Okay, this is one thing, right? Now the next thing, I'm focusing on the chart and still I'm waiting because there is no clear direction. Market is moving sideways and it is a very normal thing, especially for Tokyo session. This is the Tokyo session. Now what I will do, I need to have patience because I need to have clear direction, right? And for identifying the clear direction, so I'm removing this horizontal, this shaded area, right? Okay,
Yeah.
and I make it a zoom. Now this is the candle, right? I don't know what happens next. Now focus on the strength. Now how to identify the strength? Any candle of the same color which is giving me a close below it, right? So this candle, this is the red candle, correct?
Yeah.
You can see, and this candle successfully give me the close below the low, right? So this
Yeah.
is a strength of the seller. Mark this strength. So take the low and take the high of this area.
In
Okay.
second candle.
Yeah, second candle, right? Take the low and high of this area. Okay. Now, if you want, if you are a very short-term trader and if you are happy with a short movement, if you find now you go into 1 minute or 5 minute time frame, and if you want to take trade, a scalping trade, you can take a short-term trade. But I know that the whole trend is for the upside, right? So I should wait for the prices to give me a buy. So this is the area. Although if you are very aggressive, so you can take a short-term sell call, and you know that this is the area, right? this
Yeah.
low, right? This low is your booking point, right? Because lot of people, those who have taken buy call, they have their stop losses at this area, right? Which have been stopped out, correct? So now you are supporting lot of people, those who have try to anticipate in a bullish movement which is going to happen in future. They have taken their buy trades, put their stop losses over here, and they are being stopped out. Now their sentiments also changed, that oh, I had taken the buy call and now everything is messed up and it is going in the sell, and now they have created a sell over here, right? And
In this
putting,
situation,
yeah,
yeah, sorry, I
yeah,
interrupt.
yeah,
In this
I'll,
situation, yeah, in this situation, if suppose one more candle of red developed here and it crosses the
it
support line,
it crosses the support
then what
line.
will be the situation?
In that situation, in if this thing happens, that we have this kind of three candle formation over here, red, right? You're talking about this three candle, right?
No, no, no. I am talking about the big
This current,
candle.
right,
Again,
right,
one more
right.
candle,
You are
and
telling me
crosses
that
the
this
yeah,
candle and this candle, all these three candles are red, right? In that
yeah,
scenario,
yeah,
what should I do, right?
yeah, yeah.
It is an indication that we have the three black crows formation, and for three candles of 15 minutes, that means for 45 minutes sellers are successfully pushing the buyers downwards. But I now my biasness is towards the sell side. If this thing happens, now what I need to do, this three candles, if this three candles are red, I need to draw Fibonacci of this three candles only, right? Okay.
Small Fibonacci.
Yeah, small Fibonacci. Only of this order flow, this three red candles. That's the reason I'm giving you example over here of this three red candles, right? One, two, three, right? Three candles we have
Ah,
over
yeah,
here,
yeah.
right? Same. That's
Yes,
the
yes.
reason I've been discussing. So what I'll do, I'll take the Fibonacci of this high and low, right? And see, right? So this is the area. I wait for the prices to take the correction for the upward. And once the candle is being rejected, like this is the last bullish candle, and in the next candle, the low has been taken by a red candle. This is the time I take my sell. I place my stop losses above here. Okay.
Correct. Correct.
Okay. So what risk to reward I'm getting from this low? I'm taking the sell. At this high, I'm keeping my stop loss almost 8 point. And now see, almost 10 points, almost 8 points. See
Yeah, 10.
exact. I'm getting 1:1 of risk to reward. Okay. But this patience of a retest is a very rare thing to find in retail traders. We all have to develop this patience, right? That every time if you are talking to the market, at least market have to listen to you two times and need to react in the same manner, right? Suppose, although I don't want anybody to offend, just to give a uh, analogy, right? So I'm using that. Suppose if I like a girl, I'm seeing a girl, right? I've looked at her and she smiled. This is the first sign. I said hi, and she also said me hi. So that means two times I've given the response, and two times the girl have given me the right response.
Now,
Now,
green
if I
signal is
exactly if I approach that girl, the probability is very high that she'll smile. She'll not going to give me a slap, right? But
yeah.
if I just look at the girl and go to that girl and say something, the probability, because I didn't get any confirmations, right? So for that two signals, I need to wait. So what here, those two things, I've seen a order flow, and order flow means every candle should renewing its low or its high. It is a mandatory thing, remember. So this is the candle, this is the low, next candle successfully give me the close below the low, right? Then this candle form and the next candle successfully give me a close. That means here in this price action the sellers are very active. Okay, but how should I know that sellers are active? I need to see sellers beating, right, or defeating the buyers. So what over here happens? Now buyers came into the picture and they try to push the price upwards for the same 45 minutes. In the next this 45 minutes, sellers are active. In this 45 minutes, buyers are active. But they are failed to push the prices above the high of this last candle only. It is an indication that buyers are not that much aggressive or that much powerful at this point of time. So you can take a sell call, but according to this microstructure, right? This microstructure, and it will give you exact amount of data always. That means 1 is to 1 risk to reward you will find, and very good accuracy you will find if you want to trade on a microstructure. But I would suggest you for gold trading, 30-minute time frame is very good. That means if you find any
Okay.
divergence of, right, on RSI, MACD, stochastic, any indicator you use, that divergence work best on 30 minutes, right? And then H1 is very good.
H1.
H1 for gold trading, H1 is very good, right? We'll discuss that. So this is one thing. Through this you can identify or take a short term trade, but we want that what is going to happen next. Now what happened? Try to understand the market structure. Prices went up, right? And this is the last selling candle, correct?
Yes.
Right. I want a candle to give me a close above the high of this candle. Then only I'll think that buyers are successful in closing the trade, above that, right? That
Yeah.
means buyers are in control because they have
Active, more
defeated a
active.
seller right now. But what happens? They have tested and again they went down. Correct. And again,
Yes.
I will take a short trade, right? If I am a very aggressive trader or I'm doing scalping, I take a sell call because I have a green candle and the next red candle successfully give me a close, break in the low. So I'll take my sell call, put my stop losses at the high of this candle. This is almost how much? 4 points. Okay,
Okay.
4 points. And I'm getting almost 5 or 6 points. That means 1 is to 2 restore reward. Almost I'm getting over, right? But this is for very aggressive trader. And if you're uh, have that much time, because this is early
Yeah.
morning, right? But when this is hitting my target, the thing which I'm noticing that here I have three buyers which have successfully renewing the close, right? See, this is
Yeah.
the high. This candle successfully give me the close above this. This is the high. This next candle give me the close above the high. Correct? Now what I will do, same thing. I'll apply over here. What I'll do, I'll draw Fibonacci of this zone only. This zone. I take the high of this candle and the low of this candle.
Mhm.
Right? This. Okay. This low. This from this low to this high. Right? Now what happened? Prices came down, right? Try to break
Mhm.
the 75.5 level, and again, but the size of the candle is very small, right? That means the momentum is getting slower. So if you are driving a car and if you want to take a U-turn and your speed is 120, what you will do? You can take a
Yeah.
U-turn
It will
at a
take.
speed of
Yeah. Yeah.
120. No, you are going
It
to
will
slow it
overturn.
down. Exactly. So
Slow down.
what happening over here? The candle is getting close, very smaller, smaller. That means the momentum, the speed is getting slower. And why it is getting slower? The chances of a reversal is very high. It is a first indication. Second indication, the market structure which I have identified is a bullish flag pattern, right? Third confirmation, just by looking into the chart, this is the last low. Below this low, if this candle successfully give me a close below the low of this candle, that means the lower low formation happens, right? Either
Yeah.
we have higher high formations and higher low formation, either we have the higher low and lower low formations. So high we have a high over here, we have a low, then we have a higher low. Now I need one lower low, right? A low below this level,
Yeah.
but this doesn't happen. And all of a sudden again we have a three candle, strong three candle for the upside. And this is the candle which have successfully given me a close above the last climax candle, last selling candle. And this is the
Mhm.
time, this is the price from where you have to take your
Inside.
entry, right? This. And now see the volume downside. If I compare the previous three candles or the previous price structures from here to here, right? This is the average volume, correct? And all of a
Yeah.
sudden, in a very small candle, we have a very strong upside movement. This is called the footprint.
Okay.
Okay, this is where the market big players of the market or the hedge funds have entered into the market. Why? because this is the last low. After this, we can see lot of candles which are taking low, right, of the previous candle, but this is the last
Yeah.
candle from where the prices started going upwards. So this is the area which you have to mark. If you miss that, then wait for other another price action. You need two strong candles, same like which we have identified over here, right?
Yeah.
Same kind of two candles if you form. So I find this two candles over here, right? So this is an indication from above this area you can take your trades, right?
Okay. I mean, confirmation of two candles you are
Two
telling
candles,
after
right?
the
Two strong candles we required, right?
uh,
Now,
support
when,
level.
yes, now when you will book your profit. So, when the fear in the market will come. Now we know that the prices is moving upwards. That means everybody is bullish. Now, as a hedge fund manager or as a market maker, I want to provoke your psyche towards the sell side. I want you to that you should take exit from the buy, right? Now, what I
Mm.
will do, I will make one red candle and make a second red candle, right? Suppose if this is the market, right? And this is happening, right? I just remove the chart slowly, right? Step by step, right? So this is the thing happening, right? And just by looking at this candle over here, majority of people, what will they do? Either they cut their half position, they book the partial
Yeah.
profit, or they get exit. They book the profit, right? If somebody is holding, otherwise we are getting 1:2, 1:3, 1:4 resto reward, right? Although
Yeah.
this is a trending market, that's the reason. But now I'm giving you when to take exit, whichever strategy you are using. You need to take exit only when you find any green candle and the next red candle take the low of that candle. Okay? So if I talk about
Green
the
first is green candle and second
first,
is red
right,
candle.
second is red candle. If
Uh,
that is green candle also, you want this low to be taken, right?
uh,
But it have not been taken. So what you can do, whatever buy you have taken, you should revise your stop loss at this level. Okay. Now
trailing of
again,
the.
yes, trail the stop loss to this low, because prices try
Mm.
to breach the low of this candle, but the buyers are so much strong that they have pushed the prices again upwards. And we have a very good pin bar formation also over here. Correct?
Mm.
Again, they have pushed the prices upwards. Now again, I'm waiting. I find a very strong green candle, then again the next green candle, then again the next green candle. So what I'm doing, I'm trailing my stop loss from here to here to here. Now I make stop loss over here. Now what happens into the next candle? Prices are moving sideways and all of a sudden I have the red candle. So this is an first indication that now the momentum is getting slower, and at this level my stop loss has been stopped out, but in profit. Correct?
Yeah.
Okay.
Okay.
Okay. That means,
We will
yeah,
target up to here, this point.
target up to here, right? You should trail your stop loss, because we don't know that how much movement it can give us. First, you should at least try for 1 is to 2. If after 1 is to 2 also, you're not getting any candle which is taking the low of the previous candle. If I talk about the sell side, if I'm not finding any candle which is taking the high of the previous candle, right? So I can continue that position for a longer period of time. That is the reason I've told you that if you're taken a very good buy trade in gold, you should hold that trade for a very longer period of time. And how you should do that? You should use this strategy which I've discussed with you. Okay.
Any indicator is there, I mean, guiding us for the trailing of the asset?
So although the candlestick is very good, but if you want any indicator, RSI is very good. Another
Mm.
indicator is ATR is very good, right? Whenever it is getting overbought, you should take exit.
Mm.
Okay. And you can use 9 periods, right? And always, whenever you are placing any indicator, what period you should use. So although I'm giving you 9, you should use 9 because I've backtested it lot of time. But focus on consolidation and try to identify how much candle they have used, right, to design that consolidation. If it is 9, see, Over here it is 9. You can see, right? From here to here,
Yes.
1,
Yes.
2, 3, 4, 5, 6, 7, 8, 9. Right? So I've used 9 periods. If you find that current consolidation of 5, use 5 period of indicator.
Hmm.
Okay?
Okay.
This is a
Okay.
rule of thumb and it worked very good, right? Use any
Yes.
indicator. You want a count, how much candle or how much should be the period size? Use the candle count of consolidation, not of trend, right?
Okay.
Okay, not of trend, of consolidation, right? Same, whichever time frame you're using. If you're applying it on a daily time frame, try to identify the latest consolidation which you can identify and count the candle and take the period of that candle. Okay.
And from the change of the character.
Yeah, from the change of the character also you can take. If you are using the SMC and all concepts, right? Then you are waiting for there is a break of structure, then prices went up, then we have a close, and then again we have a test. Then our choke change of character is going to happen, and after that we are going to have two things. One is the inducement, one is the liquidity sweep, right? And it is very confusing. That's the reason I've told you that don't use SMC and everything. They are using the old thing, just they have done the packaging and they are giving you a lot of new words, right? Dow Jones have done all these things,
Too
right?
much lagging is there, sir.
Exactly. And just by reading the chart bar by bar, it is telling us lot of things, right? In my trading journey, I get my breakthrough when I've started reading the chart. And then I use my indicator to take second confirmation from the market, right? For my biasness. Yes, Tofile, yes, you can ask your questions. I understand Hindi also, I understand English also.
Yeah,
Sir, Anurag
Yeah.
sir, in this continuation only, I have one more question, if you allow me.
Yeah, please ask. And then, Tufail, I'll take your questions after this,
Yeah.
right?
okay.
Okay.
Yeah,
Okay.
sir. Tell me, in this
Okay.
consolidation, what is your second question? Yeah. Now the second question came that if my position gets stuck, how
Yeah.
should
Yeah.
I?
That was my
Right.
this thing.
Now I'll give you. Now
Yeah.
this is a very important thing. So those who are listening to me very carefully right now, very attentive. If they are not attentive, so please be attentive right now, because we need to do a lot of mathematics. Or instead, I do the math. I want you to do the math, and it is very easy. Okay. Now suppose. Uh, like our respected client have told us and they have given us an opportunity to discuss a very important thing. Suppose what happens over here, I'll write it down, right? He has taken a buy, right? Just to make the calculation easy, I'm making the lot 1, right? So he has taken a buy, okay, from this level, okay. Now what happened? Prices went
Yeah.
up, but all of a sudden something news came, or although it's a ATR value, prices fell down, right? Now there are two scenarios. Either my stop loss is going to hit if I have placed that stop loss, and majority of people don't place their stop loss, first of all, right? Second thing, that they don't have an idea that where to put the stop losses. So I've given you the idea that this is the three strong candle, right? Either from wherever you are taking the buy, take the ATR value of that, multiply by 2 and place your stop losses, right? Or you can take the last fractal point as your stop loss. So because we have taken a buy from here, this is the last fractal. So what I'll do, I'll place my stop loss at this level, right? So an entry at this level, correct? So 4337 and 4318. So I'll make the entry 4338, right? Almost 20 points of movement we have, right? 20 points of stop loss, correct? Okay.
Yeah.
Now, instead of placing the stop loss, what I'll do, I'll place a pending order over here, right? I hope everybody understand that what is a pending order. Pending orders are those orders which we can place in advance. If prices reach that level, then only that order will going to get executed, right? Otherwise they will be cancelled, right? So what I'll do, I'll place a pending sell stop order over here, right? So I'll write it down, pending sell stop order, right? Just try to understand the logic and the math, right? Because lot of question will come into your mind that what will happen if prices go up. Just try to understand it, then according to your appetite choose the lot size very slow and then take this. So I have placed the sell stop order from here and I have taken two lots into it. I just need to double the lot. Okay. Okay. So $1 of movement equals to how much? If I've taken one lot, $1 of movement is $100. Okay. That means $20
$100.
of yeah, $20 of movement is how much? Loss, $2,000 of loss. Okay. Just to make the calculation easy, I've taken one lot and two lot, right? So don't be scared. So now what I need to do, what happens in the next candle, that my sell stop order is being executed, right? Correct? In
Yeah.
this candle, right? My sell stop is executed. Now my sale is in profit and my buy is in loss. But I need a exit point, which is a break even point. So what you need to do, whatever is the difference, the same difference below the sell is your exit point. So I've taken my sell from 4318. So 4198 will be my exit, right? Over here. Okay. 4198. Okay. Now what will happen when the prices reaches this level? My sell will be in profit. Okay. So my sell will be in profit of 2 multiply by how much? 20 points of movement, correct? Equals to
Yeah.
$4,000 of profit, correct? I'll write it down. Correct? Two lots, 20 points of movement, 2 multiply by 20 equals to 4,000. And now let's talk about the loss. So my buy is 20 points of loss from till here and 20 points of loss till here. So this is my break even point. Right? One lot multiply by 40 points of movement equals to $4,000 of loss. Right? And I can get out at break even. Okay. Now, two things.
In the like a thumb rule, we have to take double lot
Yes,
to
if
cover
you
up
if you want to exit. Now, the second
to
thing,
nullify the
yes,
trade.
nullify the trade, right? I know that this is the question which is coming from you and from lot of people, that what that we have to take such a big lot, and what if prices again went up, then what we will do, right? So there are two things which you have
Yeah.
to keep in mind. First, you need to take your entry always in the direction of the trend. Okay. If you get a reversal, selling is always very fast. If you go, right, if you try to climb a mountain, it will take a time. But if you fall from that mountain, it will take very less time. Correct? Right? Every time selling is
Yes.
very
Yes.
fast. So if your buy is going to get reversed, the selling momentum is going to be very
More
high,
gravity.
right? And you need to, this is your insurance, right? You need to buy this insurance at a very right point of time, right? This is not the case that price is already 40 points down, right, from the point from where you have taken the entry, and then you design the hedge. No, otherwise what will happen, 40 points is a very big difference, right? If price is going to uh, trade within that range, lot of patience is required, right? You either you will book a loss, right? Apart from this, we have other strategies
No,
also,
if I waited for a week, at least a week, like suppose this market trends,
right?
and
So
I
in
waited for a week, again not coming the to that price.
right,
So I
right.
can make a hedge on this position,
Yes, yes, you can do
which is
that, right?
doubling
Because
the lot.
hedging is itself hedging. I have 7 strategies to design hedge. I have given you one, right? We are using
Yeah.
martingale. I'll provide you more, right? So we'll conduct more sessions totally on hedging. This is the
Hedge.
session to give you an idea, a brief that yes, we can design a system for deciding our biasness from fundamental, technical, for our contingency plan, which is this, right? Creating the insurance, we have everything.
Yeah.
Now I go for TOEFL to fail, right? What's your question? And answer, I'll give you the other things also, right? And after that,
Yeah.
I'll take one more question and we'll try to close the session and we conduct one more session for just Q&A of this session, right?
All right. My
Yeah,
question
it
is
will be
particularly
appreciated, sir,
about the
if we.
yesterday.
Yeah, TOEFL, please.
Yeah, my question is in particular about the yesterday scenario where we have seen that we were at 4 to 8 somewhere, and
Right,
suddenly a spike came, a news, everything is gone by, and
right.
the market goes at touched 4341.
Mm-hmm.
At that particular point in time, I heard another news that silver has crashed its all-time high, 52-week high.
Mm-hmm.
The silver has crashed. So
Mm-hmm.
what came in my mind at the immediate point in time, the
Mm-hmm.
highest of all time for gold is 4381, right? So
Correct.
what came in my mind is that this is the opportunity where I can put my buy into it, and maybe like silver, it's going to hit
Mm-hmm.
the all-time high.
Right.
But I don't know how it came, and
Mm-hmm.
suddenly the market reversed
Mm-hmm.
to such an extent that it will reach towards 4258 somewhere,
Mm-hmm.
right?
Okay.
So 100, so it makes like 100 points down.
Mm-hmm.
So in
And,
such scenario, uh, the, in such a brief moment of time, we do not have to do the maths and equations and all these things. What
mm-hmm.
is the best way to address such panic situation in which you have to make sure that nothing harmful be happening to you? Number one question.
Mm-hmm.
Number two, if I put a stop loss at this point in time,
Mm-hmm.
why there is a need when I go into the profit, there is a need to trail the SL to the break even. What is the point in trailing the SL to the break even, where I know that at some point in time, after point in time, any point in time, the 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 SL will going to be hit by any chance. So there will be a zero, means to say profit or loss. It's a break even thing.
So
So these are my two questions.
if you have a very big account, right? If you have that much liquidity with your trading, and if you want to keep your positions without a stop loss for a very longer period of time, you can do that, right? But there is a dark side of this industry, right? Remember and just tell me that how many times the more you stay in the market, the more is the chance that your stop loss is going to be hunted. Okay,
We can say you can say about 70% of the time.
right. High probability. That's the reason I've told you that thing, that if you want to keep your position for a very longer period of time, you need to take your entry at a reversal point on a bigger time frame, right? Let's discuss this thing and I'll discuss the same point on the silver also. And there are tools and price behavior which will tell you in advance that what will be the high probability reversal point for the next day, right? Because take this market and market structures as a casino table, right? To attract the players, I need to advertise them, give them very good car and all, right? Bring at the table. So I have spent a lot. So just to change the biasness, everybody is bullish over here, right? At this moment. Do you think that this is the candle we retailers can make this candle?
No.
Right? No. Right? So somebody have pumped, right? Somebody have dumped, right, at this level, right? And because if they want to sell something, they need buyers, right? That's the reason every time when you have a reversal, you will see this fractal formations, this swing. Just focus on this swing, right? I'm talking about this swing. right? Prices went from here to here, correct? Then from here to here. Now if I see this swing, so prices went up, down, then such a big move, then a correction, then again a big move should come. But what happens? Prices try to go up but get rejected, because when this is happening for a lot of people, this is a order block, right? For 15 minutes, those who are trading on a very smaller time frame, they are placing buy. That means they are demanding gold, and somebody have supplied them, and this is an indication. See the rejection over here, right? So this is the candle which I've given the close. Now after C, focus on this candle only. The same kind of scenario we'll find in silver also. This candle tried to push the prices, failed. This candle try, failed. This candle try, failed. This candle try, failed. Neither it is giving me a close below the low of this candle nor a high above this candle. Now 1, 2, 3, 4, 5, and in this candle, the candle have given me a close, right? This is the important candle. If prices continue upwards, prices will go up. If prices break the low, prices will go down. But what happens? Suppose if you want to take a buy, you should place a buy stop from here and a sell stop from here, and in this direction, all of a sudden your market, you can catch the momentum. And if I see the RSI, right, if I place the RSI on this chart, 100% right now at this point of time, we can identify a divergence. Do you want me to do that?
The second,
No, it's
like
all right. I've already checked. Thank you.
Right? Yeah. So if I place the RSI,
Wow.
so I have already placed it, right? Now you can identify or see divergence over here, right? See, this is the highest point, but prices are making higher highs, but RSI is making lower highs over here. See, correct? This is the highest point and this is the point over here. So it is an indication that the momentum is slowing. And the same thing which I've discussed, we have an impulse, then a correction. We have an impulse, then a correction. If the correction is deeper, that means the health of that trend is getting weaker. Right now, we've been discussing this thing on a 15-minute time frame. So for a 15-minute time frame, we have a very strong movement, right? Very strong movement, then a very deep correction, then again a movement, but a correction which went below the low. It is an indication for lot of people, because this is the order block, this is the low point, this is the choke point. We have change of character, then again the price tested this level, done the liquidity sweep of this candle, and again went down, right? But still the probability of prices going up is very high, because this is the ATR value. So you should use ATR value. Now let's have a look on silver also. Now I have placed the silver chart, right? And which time frame to fell you are using the most?
Uh, 15 minutes.
15 minutes. So let's discuss this on 15 minutes. Okay, I'll remove this. Now this is the 15-minute time frame. Okay. Now the same kind of, although RSI is also telling me the same thing. And if I see, so this is the previous day's high, correct? Right? This is the previous day's high. Let me remove this indicator. Okay. Then at this very first candle, you can see this candle. I'm just using the ATR. Okay. And I'm using 9 period, right? By default, because majority of time you will not find consolidation more than the 9 candle. 9 is the average. Okay. Now over here, you can see my values, right? Right, this ATR, which is 0.22, that means it is telling me that 22 pips of movement is very much promising from this, right? So at this level, if I draw my line, so this is 63.25, just about 22 pips. If I do this, this will be 22, 63.47, correct? Over here.
Correct.
right? Then we have, if I add 22 over here, so I have 70, 63.70, correct? Almost approximate figure I'm taking, right? Then 63.92, correct? Oh yeah, right? Now see, same thing if I do this, so this will be the area, right? Now, these are my ATR values according to the 15-minute time frame, right? You should use 1 hour also, you can use H4 also, right? It will give you, because if you are a scalper, every time when price reaches this level, you need to observe the price behavior at this specific price level, right? So what happens? See, this is the ATR value only, right? Over here we will be having our ATR. So prices are at the ATR also. And if we see the candlesticks, right? So this is the last impulse which I can identify. Then I have a sell candle, which is an indication. So when the correction is complete, if you have any candle, right? Any candle which is like this, right? And if in the next candle, if the low is been taken, that means it is a correction. It is a correction. So prices went up, taken the correction and taken the low. That means this is a market structure. If you want, you can draw the Fibonacci expansion just by take this low, this high, and just draw the Fibonacci, right? You can see the Fibonacci level and how perfect they are being in this market, right? Prices went up and continuously being rejected. And if you see this market structure, prices went up, went down, again went up, again went down, again went up, again went down. So it is moving sideways. That means it is taking a time correction, not a price correction. It is a time correction. That means maybe any moving average or anything which the institutions are being following, that moving average relies over here, right? That's the reason instead of price taking a correction in a strong momentum, it is taking a time correction. That means it is trading between 64.53 and 63.92 for a very longer period of time. That means it is moving towards its moving average to come at a fair value at its mean. And from the mean, if you find any big movement, you can take your trade. And at this point of time, you will identify a lot of other, you can use other tools also, like we have used the RSS, we have the divergence also over here, right? This is the candle, this is the biggest candle we have, then again, then this next two candle. So this next two candle is the most strongest candle till this price action. So from here you can take a sell call, right? Now the same thing is happening over here. Now let's focus what will happen next, right? So this is the market structure which we can identify, right? So I think that we are already stretched the session too much. So if you guys are interested, we can have a one more session for at least 1 hour to take more questions from your side, and we'll discuss each and everything in more detail. Okay? Okay, guys. So now this is the last point. Let's discuss this thing. So prices went up, went down, went up, went down, went up, went down. This is the last selling candle, correct? So what I'll do, I'll give you one more very good thing. Just mark this Fibonacci, and this is the 50 point, right? Just focus. This is the 50. This is the range of the candle, right? So this is 50% down. This is 50% above, right? Now see for how many time, if the prices are, and you can use this Fibonacci, this rule of 50 in every market, in every candle, in everything, right? Any pattern if you identify. So this is the candle. Now 50% of the time, if market is below that 50, the range of the candle below 50, prices of chances of prices going down is very high. If prices are sustaining above the 50 level majority of time, right? So the probability of upside breakout is very high. So I am giving you this you can take it as a recommendation that the probability that on Monday prices would go up. The probability of prices going up is very high, and I am just using one single rule. This is the last range. Prices is being traded within this range. If I identified a structure, right? So although it is a bearish flag, bearish pennant formations, right? This is the pole, this is the pennant. Just by looking at the pattern, the probability that prices will go down is very high. So what will happen tomorrow? That prices will come down, and all of a sudden it will be a fake breakout for the downside, and again the prices get reversed for the upside. So this is my uh, analysis according just at looking at the chart, right? And if prices give me a very big candle and give me a close below the low of this candle, then my technical biasness towards the sell side is very high, right? Then the next thing, now let's take second confirmation from the indicator. So although these are the equal lows if you find, but over here I can see a divergence, right? Same thing happen over here. This and this higher is almost equal, right? But over here we have the higher high formations, right? And after this is called liquidity is contracting right now, right? So the expansion, there will be high chances of a very exploding movement is very high, and we have this last three candle formation which is very strong, right? So I need one candle to give me a close below the low of this candle, and probably that candle is going to give me a close below the low of this candle. Then only I'll think of sell. Otherwise, high chances that prices will come down, give go below the low of this candle, sweep the liquidity, and again there will be exhaustion in that candle, and prices will get a reversal for the upside, right? So this is going to happen in the Tokyo session. So the probability is very high, and still the market is not that much overbought, right? And always, this is the two candle. If I mark this area, that taking the high and low of the first strength candle, this will be the target area that prices will going to test this level, right? And this is at 63.95. This area is going to be tested. If prices wants to go down, first they need to come this at this area, test this level, get rejected from this area, then go down, right? If from here only prices go down, it is just a mere correction. Again, prices is going to get reversed. Now, if I talk about fundamentally, so silver is not only in demand because of the jewelry. It is a industrial material, right? It is being used in the photovoltaic cells of the solar panels. Right now, it is in very high demand. Second demand is coming from the electronical components. Then third demand, very strong demand is coming from the electronical vehicles, right? So they are making the lithium batteries. In lithium batteries, they use the nodes, right? The rods they use, which are being manufactured by silver, right? So silver is a main component for that. So lot of demand is coming from silver. Then there are only three big mines from where the silver is coming, and out of which one is going to close soon, right? Because silver, we don't have any mines for silver. Silver is a byproduct of bauxite, byproduct of aluminum, zinc, right? Iron. When we mine this, or gold, if we mine, silver is a byproduct, right? And for if you want to know more about silver, so there is one thing which is called World Silver Survey. Just search it on a Google. You will find lot of important details related to this year, related to silver. And silver is the most favorite metal of central banks, right? When we print notes, the dyes and the ink which we used, they used iron, silver ions they used, right? They use silver dyes, and to maintain a specific weight into their treasury, because gold is not that much available, they need to maintain that weight, they need to maintain a specific weight in terms of natural resources, so they buy silver for that weight. Okay, they make coins also for silver by making the alloying with zinc and all, right? So silver is having a very high demand.
So you are saying if it is an investment purpose, the silver will be a best option.
Exactly. But as compared to the gold, right? Silver is going to move less. If silver is moving, that means the central banks are active right now, right? And in the World Silver Survey, probably in the next session, I'll cover the World Gold Survey also and Silver Survey also, and we discuss that thing. Hardly it will take 15 minutes. It will give you a lot of insights. You will be surprised that how you know that right now your government wants you to be poor, or they wants you to be wealthier, right? Just by this, right? If there is lot of demand of silver, and if they want to buy silver, high probability that majority of farmers and small people, they invest in silvers, right? So they make situation like this, that lot of their silver is coming into the market. So right now, whatever is the exact demand, out of that demand, 18% demand of silver is being fulfilled by melting old silver jewelry, right? That means the scrap silver they are using. There is a shortage right now of silver. Okay, a lot of your ICs and all, they use silver, right? They use silver foils and golds for making the conductors which are being used in space programs and all, in aircrafts and all, right? So you can find a whole big thing. So it's a very important industrial material. It's used for lot of industries. Only 37% is being used in silvers, right? Rest of the 17 or 18% is being used in coins and bars, and rest 67%, I think that is the figure, 67 or 57% silver is being used in industries. Okay, so because the session is
Thank you.
being stretched too long, and still there are few slides which needs to be discussed, so I really want all of you to attend the next session, in which we take more questions and the remaining slides, and I have lot of data and facts and figures to share it with you, right? So I want that thing. And before I close the session, okay, I want one thing from your side, that at what time and at what day should I plan the next session, and what duration should I take, because I want to handle the questions of each and everybody who have given me the time, and I hope I have justified that time. So I want the answers from you guys. Same time? Okay. Yeah, I understand, because of the off-peak timing. Done. So on the next Saturday we can plan it at the same time. I want that if we have an holiday, I want to discuss lot of thing in the live market with you. Whatever I have given you, I want to prove that in the market, right? That how I am applying those things, the hedging thing and all, right? Still the lot of slides are available. So okay, although we'll plan on next Saturday, the link will be shared. Before I close this session, the last thing which I want to discuss, after that Vilal will uh, do the end of the session, right? He is having some message to share it with you, but before we end, I just need to share few slides with you. Just give me a minute. Right. So these are the slides which are being left, which is related to the risk management. I need to give you lot of mathematics, right? So here I've given all the mathematics which are being involved in designing your hedge and all, right? So over here everything is given, which we'll discuss in the next part, right? Then the hedge cover thing, everything is given. How many types of hedge we have? What are the hedge rules? What are the pros and cons, right? How to design the hedge so instead of booking the loss, we get exit at break even. So I'll give you the practical things in this, right? Then the contingency plan, that if you have faced loss previously, or if you face the loss, how just by deploying a small amount, with a very small amount, and within a 30 or 50 trades according to your trading style, we can recover your loss. Just you have to follow my system religiously. I'll design that plan in front of you, because there are a lot of parameters. That parameters you have to put according to your thing into that sheet, and your risk management plan is active. Whatever that plan is telling you, that take 3 trades with this lot, you need to do that. And in that you get the system also, strategy also, on which strategy you're going to work. That strategy is only for your loss recovery. So whenever according to that strategy you find any setup, you need to place the trade according to the risk parameter which is given in your contingency plan, and will recover the loss along with the normal trading. Okay, it is feasible and it is achievable. Okay, but you have to have patience, right? So over here I've given this, then these are the resources and facts. So I've given of gold, right? So on an global level, how much money is flowing, right? So if you see gold right now, lot of investment are into gold, right? Over here, what is the major use of gold? So 33% is being used in jewelry, right? 7% is being used in your technology. Your iPhone IC chip is being made of gold. Okay, uncertainty because of the safe haven assets demand and all, right? And the central banks, right? I have given the central banks data also over here, right? You can see in last years which central banks have bought the highest gold. So if I talk about Poland, almost 90 tons of gold they have bought in 1 year. Turkey 77, India 72 tons of gold, right? China 44. And which central banks are selling the gold? So these are all those very small central banks except Singapore. If you find big central banks are selling gold, that is the time to book profit in all your buy position and then think of selling, right, for a very longer period of time. Okay, if you find any big banks
So
selling
one
silver.
question. One
Yeah, yeah,
question.
please, please.
So from where this data we can get it
Yes,
from the
yes,
line?
yes. So in the next slide, I want all of you to take the snap of it, right? I've given all the important websites, and apart from that website, you don't have to go anywhere, right? Just focus on it. So this is the total cube, right? Total gold which we have till now. Okay. From the day when we are using gold into our civilization till now. So there is only just. Okay, so 54% we have in as in jewelry, 17% with the central banks, say 8% with financial investment. That's when big banks, JP Morgan and all are holding. Then we have the bars and coins, right? All other informations we are having, right? Technology and how the next thing is going to impact and in which industry the gold demand is going to increase. I've given in this. This are being left, right? What is the future projection for 2026 according to the macroeconomic and statistical modeling? So over here we will find this, right? And this is the thing which you can take, right? You take the snap of it, right? So for your latest news and all, you should go to trading economics every time. Don't go to Forex Factory and all. You'll find your economic calendar along with charts, projections, mean variation, everything, right? For demand and supply data, this is the website you need to go. For the central bank's activity, whether they are buying and selling, this is the link. Okay. For gold ETF activity, ETF is the most important thing, right? If I tell you that $100 billion are being traded into gold, $70 billion are trading into ETF, right? And in future, lot of people who are not going to follow the things which I am telling you, they are only allowed to invest in gold ETFs, right? They will not be able to buy physical gold, right? Because central banks, US government, everybody wants gold to go up right now, right? So there is one company with the name of SPDR, right? I've given the website over here also, right? It is the world biggest gold ETF, right? So I've given the link over here also, right? For pivot point calculation, I've given the babypips.com, right? So over here, all the type of pivot points are being calculated. How to use it? Mark the ATR line and draw the pivot point. Do the calculation on the basis of previous day and mark it. If your ATR value and pivot points are aligning or syncing, overlapping, it is a strong reversal zone or a strong zone from the prices can get a rebound, right? Remember, for the commitment of trade report data that producer, manage money, swap dealers, this is the official website, right? For the Fed interest rate decision, CME group, this website, it will give you two graphs and the probability is written. If probability is increasing and decreasing, accordingly we have to understand. Okay, I think I speak a lot. but everything is being missing, right? Okay, no worries. So here all the
Anurag,
news are, yeah. Now,
Anurag, you
now,
were mute for the while.
yeah, yeah,
Now
yeah,
you're
yeah.
audible. You can repeat your last, words.
Last thing. Sorry, guys. Sorry. So these are the fundamental data which are still pending to be released and which I want to discuss it with you. These are the previous slides which I want to discuss with you, right? So like this, we have contingency plan, the practical things, the hedge cover, how to design the hedge cover, what are different kind of hedge, what are the mathematics involved. I'll give you the Excel sheet and we'll do everything on an Excel sheet practically. Understand all the hedging thing. Then the contingency plan. This is the plan which I'll provide to you just by spending a very small in each. That means deploying a very small capital into this plan, you can recover your loss, right? It will tell you that how many trades we need to take, which strategy which we need to take, right? And I'll provide you the strategy also in this, right? So according to that strategy, whenever you find that kind of setup, you need to take trades according to the risk parameter which is given in this contingency plan, right? It will help you in recovering your loss, but you have to follow it religiously, right? So in the next session, we'll discuss this thing, right? Why it is important and how to manage your portfolio and your positions when this kind of events happen. So, and what are different kind of strategies which we have. These are the resources and facts which I want to discuss it with you related to gold. But in the next session, we'll take gold and silver both, right? So 7%, 33% is being used in jewelry, 7% is being used in technology. Like all the iPhone chips are made of gold, right? They have few grams of gold into it. Uncertainty, that is the panic buying, safe haven demand, and the central banks. The next, which is more important, this, which we want to discuss. Which is the country which having the largest increase right now, right? This is for 1 year, right? So Poland, Turkey, India, they have bought 72 tons of gold in a 1 year. If central banks are buying, what we should do as a retail trader, we should also buy. When we are going to sell, when big economies, right, like US, India, China, if we find their name over here, if they are selling gold, so it is an indication that there will be an oversupply in the market. At that point of time, we need to book all the profit in our buy, and instead of taking buy, we should think of sell for a longer period of time. Okay, so this is the data, right? And this is the cube which I'm talking about, 22 minutes. This is the total gold, right? 54% is being in form of jewelry, 8% in financial investment, 17% is being held by central bank, and US is the number one. Bar and coin, 21%, right? So these are the new technological advancements which are happening, which is going to impact the gold demand in the future in the upcoming 2026. So I want to discuss this thing also. This on the basis of statistical macroeconomic analysis. This is the projection of gold for the upcoming 2026 outlook, right? So highest probability that gold may reach the 5,000 mark, right? Why it will? Here the highlights are given, right? Although we'll get this file, and in the next slide we'll discuss this in greater detail. Now this is the most important part. I want you to take the snap of it, right? For the latest news, go to trading economics. You will find all the important news along with the statistical data and the economic calendar. For demand and supply data, go to this website, right? For the central bank activity, whether they are buying and selling, you go to this website. For gold ETF, so SPDR is a world biggest gold ETF, and 70% of the trading volume is being done in gold ETFs only. And those who don't follow the information and knowledge which I've shared in over here, high probability that those people are not going to buy gold physically, right? Because gold is going to so much costlier that we are going to have gold in terms of paper only, right? Which is gold ETF. Okay. Pivot points. So for calculating all the types of pivot point, this is the website. Just go to that. You just need to give the previous day high, low, close data, right? And it will calculate the pivot point. Mark the pivot point on your chart, then mark the ATR lines on the chart. If both the things are overlapping, this area will act as a strong magnetic area. That means this area will act as a strong resistance or support, right? For the CFTC data, which we have discussed, that what producers and merchants are doing, what swap dealers are doing, what managed money hedge funds are doing, to have an idea of their activity, we will find the data at this website. Is a US government website, okay? Then for the Fed interest rate and the sentimental data, we have the CME group data. Here you will get the 2 or 3 graphs, and over above the graph there is probability is written. If on a daily basis that probability is changing, that means suppose the interest rate cut probability is 80% and after 6 days it becomes 6%, that means the sentiment have changed. There will be no interest rate cut. If no interest rate cut, dollar is going to get stronger. There will be a fall in gold, right? Weakness will come in gold. So through this you need to analyze this, and if you have analyzed the gold correctly, the whole market you can analyze very easily, right? If gold is going up, dollar is going down, dollar is going down, euro GBP is going up, that means euro USD, they have the correlation, right? And over here, right, at this you will find the correlation calculator also. Every day find the correlation between dollar index and gold. You just need to select dollar XAUUSD and this, right? And correlation will be calculated. The correlation is more than 0.70, that is the day you need to take the trade, right? That will be a volatile day, right? This is the commodity index. It will tell you that all the big players of the market what they are doing. So this is called the S&P Global Commodity Index. It is a very important index. If it is increasing, that means the demand of gold and silver is going to get increased. If this is going down, that means indices is going to go up because people are selling gold and investing into riskier assets, right? So every day you should have a look on this commodity index, right? Now all the gold ETFs which are present, right, throughout the world, right, all the data will be given over here, and you'll find the details of all the companies, right, which are being involved into gold, right, directly or indirectly. You find the data over here, right? And this is the world biggest gold ETF. This is very important. If the demand of this ETF is increasing, its graph is going up, gold is going to go up, right? This is called the SPDR globals. So that's all for my side. Although I stressed the session too long, so here I end the session from my side. My friend, my colleague, now Bilal, will interact with you, and he will do the closure of this sessions. I hope you guys have enjoyed whatever time you have given. I've justified that time, right? Your investment of time, and we'll meet again on the next Saturday at the same time. Link will be shared, and we'll discuss the next thing in a more practical manner. Okay, and that will be more Q&A and more interactive session, and everybody will get a chance. And those who want the PDF, they just need to message their relationship manager. You'll get the PDF just after 15 minutes of this session. Okay, so thank you guys. This is Anurag signing off for today. Have a great weekend and a very balanced trading ahead. Thank you guys. Thank you.
Bilal, you unmute. You can go ahead.
Guys, please stop. Just a minute. Stop. आ रहे हो? मेरे इस पे आ जाओ, मेरे सिस्टम पे बंद है।
अरे यार
Hi. Thank you so much, Mr. Anurag, for giving your valuable time to our valuable people here on the session. And first of all, like my name is Bilal. Basically, I'm a business development manager in Beerman Capital. So why I connected here? Uh, because actually the point is that I can see that on the Beerman Cap on this website on this Zoom session, so many people are panicking for the time that Saturday, Sunday, and everything. So I want to make it clear that you guys will receive a Google form or a QR code or your WhatsApp from your relationship managers. Okay, you can fill out those forms with your like time zones whenever you guys are free. Choose your own time, file your own name, WhatsApp number, and everything. You will get a confirmation message over the WhatsApp. That thanks for registering for Beerman Capital webinar session. You need to choose three things, like whether you are a beginner, whether you are a traded before, or whether you want a platform understanding. So, by the way, two more lessons from here. That's first of all, that next session would be more having the clarity. We offer a free one-on-one market orientation call where we can recover how platform works, like order types, leverage, mechanics, swap fees, risk controls, common mistakes that account wipes, and whether this space is even appropriate for you or not. This is not an advisory call, whatever Anurag has been taken. This is totally an educational session which will make you a disciplined trader. So, again, I'm saying you will receive a QR and the link over the WhatsApp. You can fill those forms for the next session according to your time. It's not about Saturday, Sunday. Whatever you will choose, you will get a pop up over the WhatsApp. We will do the checklist and confirm it, and then we'll revert back it to you. Thank you so much for your time, guys. I hope that
Bilal,
this, yeah, please.
Bilal, we have shared the link in the comment section. Anyone who wants to fill the form, everyone can fill the form as of now. So you now not do not forget in the end.
Sure.
Okay, yeah, the link is there in the chat section.
Yes, link is there in the chat section. You guys can copy those link, and if you want to fill that form as of now, you can do that too. I'm not making this meeting over as of now, so you can take a time for 5 minutes. You guys can fill the form, and if not yet, then you can copy that link for yourself, and you can do that later as well.